Hi folks, Dan Bird here once again, sitting in without Mike Zuber. Hopefully he'll be back soon. I think maybe next week, possibly, or the week after. I do know that I did notice that he's added 35 seats to his Vegas event. So if anybody still wants to go to that, I think there are some now available once again. He'll announce that, I'm sure, for everyone. But it did sell out, so I think he added a couple of extras, like 35 extra seats. Anyway, what I want to do in this video today is Sunday, November 26th, is I had a request from somebody on the Wednesday video to take a look at Tesla and give my opinion on what the chart looks like for Tesla, which I'm happy to do. It's not a recommendation to buy it or sell it. It's just informational and educational. I'm not a licensed broker or money manager, so I can't give you recommendations on what to buy or sell, but we certainly could look at the chart just from an educational standpoint. So let's take a look at that. Let me share my screen. If anyone would like to get my free newsletter, just log into breakpointtrading.net, and right up in the upper right is the newsletter. And just click that and you can download the PDF. That usually gets published every Saturday. I do it for my own research purposes, but then share it with folks. So you might find it interesting. By the way, there's in the last video, I talked about some things in the newsletter, but there's one I also want to show. This was in the newsletter as well. But this is the seasonality trend for the S&P. And you can see here, the first part of the year, January and February, kind of goes sideways. Then it has a really nice run into May. This is the sell in May, go away idea. That doesn't always work, by the way. But usually during the summertime, markets usually go sideways, typically. Sell off here until the middle of October or the end of October. I've talked about this before. One of the reasons that happens is because mutual funds and some hedge funds need to take their capital gains or losses before October 31st, not December 31st. So that's why a lot of times the market will sell off in October, and then they will get back in the beginning of November. So that's when it starts to take off. So you can see here, November, this is where we are right at the end of November. And look at the first couple of weeks of December. This is what I talked about in the last video, that I think we might have a pullback coming. I showed that on the indexes and why I think that might be happening. I'm going to talk about that in relation to the Magnificent Seven and Tesla in particular. But take a look at right here, the first couple of weeks of December, typically seasonality-wise, the market sells off. Might have a little bit of a rally in the beginning and then sells off, and then it really takes off. And I think it's going to take off into the end of the year. We've got about a little more than 5% to go to hit all-time highs, believe it or not. It's not very much more to go. The market actually in the last 4 weeks has gone up 11%. That's the S&P. So it could very easily go up another 5% by the end of December. But that's seasonality. And then the other ones that are interesting, these are from Real Investment Advice. This is economic composite GDP wages and rates is the red, and inflation rate is the black. The thing to notice here is that while GDP wages and rates have been coming down, and inflation has also been coming down, those in the red line is starting to tick back up again. So even if inflation continues lower, the Fed really might have a problem early next year in that the economy might be stronger than what they want it to be, even with inflation coming down. So, well, I'll talk about this as we get closer, but there's a potential for another rate hike in January. We'll see. This one here is also interesting. This is inflation versus Fed target, which is the black line, 2%, and real GDP. Real GDP is the green down here. You can see GDP really declined significantly as the Fed was raising rates, as inflation was going up, I should say. But as inflation hit a peak up here and then started to come down, the GDP is starting to tick back up again. So that's why the Fed might actually have a problem. says that 70 show. So this is in the newsletter and you can get this for free, but I added in down here, this goes back to 1957, but it only ends in 1982 roughly. So I added in the secular bull and bear markets that I always like to see because they have a significant effect overall on what happens. The economy will have an effect on the market. What you'll notice, all these gray bars right here are recessions. Notice that during secular bear markets, there are lots of recessions. And those recessions can sometimes be very deep. In a secular bull market, there are very few recessions. And this one here goes back to 1940, about 1950, roughly. And there were only 2 recessions during that period, and they were short and shallow. We are in a secular bull market right now. And if we do get a recession next year, I think it will be short and shallow as well. So I just wanted to show everyone that. Let's go back over and take a look at the charts for Tesla. Before I do this, I want to show you, because the charts I'm going to show kind of come from this market timing strategy. This is something I introduced a few weeks ago that I learned from Turner Capital Investments at the Money Show in Orlando. I'm going to see Mike Turner, the CEO, week after next in Sarasota. Maybe have dinner with him and talk about what I've done with his concept. But basically, he looks at the total market, which includes not only the Dow, the NASDAQ, and the S&P, and the Russell 2000, but many more stocks, 3,800 stocks. And then maps those out on a weekly basis to identify where the market turns are. So where initially, let me look at this one here. This one is the one that makes it really clear. So from a long-term basis, where are the turns? So you can see right here, right after COVID, turned green, went all the way up and did not turn red again until the beginning of 22. So almost a year and a half, you could have stayed in before selling and getting out. There's only 3 trades here in about 2 years, a little more than 2 years. So I love this idea. It's a great idea. I mean, I've talked about it before, and it's out here on my website. If you're interested, this explains the whole thing, and it gives you charts to play the NASDAQ or the S&P. You can do double leverage. You can play it to the downside when those things turn red. Lots of ways to do it. But that idea right there, I'm going to carry over to the Magnificent Seven and Tesla in particular. But before I get to Tesla, let's look at some of these other ones and give you an idea of how I use these charts. So I've got the Magnificent Seven. Actually, it's +4 because I've added 2 more in here. I added Netflix, AMD, SMCI, Supermicro, and Oracle. Now, Supermicro is a mid-cap stock, so it's a little bit different than the rest. The rest of these are all large cap. But first thing, the way to use this, and this is a market timing strategy. So the way that it is most effective is to get in at the turn of the market. Now, that could mean being patient and waiting up to 6 months or more before that happens. But if you can, then you can stay in it much longer. You can have very few trades, so you don't have to worry about it. You don't have to watch the market all the time, and just get out when the trends change. So let's take a look first. I'll look at Google. We'll start with the weekly. Look at the long-term chart for Google. And again, this goes back to COVID back here. So when the green one crosses and the color turns green, that would be the time to get in. That would be here. So this was in roughly April timeframe of 2020. And this would have kept you in until January of 22, which is the beginning of the bear market. Now, all of these, even though it looks like these are going up right here, they're still underneath this red area. So if you got out when it crossed right there and just went to cash and did not do anything until this turned green again. So somewhere in this range right there. And you can see that it still is green for Google. So that would have been a great time to get in. But this is what I mean by, if you really follow this system, it might take you a long time to get back in. So you would have been in here roughly in March or worst case in April of 23, but you would have had to wait since the beginning of 22 for that to start to turn green. However, if we look at this on a daily chart, now it's a little bit quicker. The problem is it also gives you reds more often. So you have to watch it and be careful about that, because it could actually take you out. But that actually might be okay, because you'd be out there and back in here, almost a break even. You'd actually be getting back in a little bit lower than when you get out. But notice that Google on a daily basis is just beginning its run, just starting its run right now. In fact, it started back here. If we look at this bottom one down here where those lines crossed, started roughly on November 14th. And even though these haven't crossed yet, if you were an aggressive trader, you could have got in about November 14th, 13th, or 14th back into Google. But look at the long run that Google had, and then if you went out, went into cash right there, or shorted Google all the way down to here and got back in at that point. Finally, to look at a closer in view of Google, just click on the whole thing right there. And now you can see it right here. And we can see where these moving averages crossed right there is November 14th, which is exactly what that daily chart said. So the idea here is to use all of these things as cross-references. Cross-reference your ideas to make sure that everything is validated by longer term and shorter term charts. Again, to really play a market strategy like this, market timing strategy, you have to watch it. It's best to just track a few stocks. That's why the Magnificent Seven is perfect for this. So you can look at this like with Apple, for instance. If we look at the weekly for Apple, there it is right there. Apple just on a weekly basis on November 6th turned green. So that would have been the time to get in with Apple. If we looked at the daily chart on Apple, in this case, it's November 9th, so a little bit earlier. So in this case, you could have gotten in earlier. And the way to do this is you look at the weekly chart, notice that it's starting to move back higher. Right here at the end of October, it's starting to move back up, but it hasn't crossed yet. So then you can take a look at the daily chart and see that, and watch this one on November 9th is where it crossed. Now, once you get in, you can probably stay in for quite a while. You can see back here, it stayed in Apple for quite a while. There was some choppiness in through here, but you actually stayed in. And then you can look at the closer in view. And in this case, you can see where this line, this background green and red, and this gray one down here, where they cross about November 2nd or 3rd. And then where the moving averages crossed around November 6th. You could have got into Apple. Let's take a look at NVIDIA. Big one. NVIDIA right here. Here's the weekly. Look at how long it could have kept you in NVIDIA. So you would have been in, if you were conservative and waited for it to cross the red line, you would have been in at $200 in NVIDIA and never would have sold out. If you're following the weekly, you would have got in down here, the gray, the black line is crossing the green as well. So right there, January 23rd, you could have got in at 203, and you still would have been in. Never would have been out. If we look at the daily chart of NVIDIA, in this case, conservatively, January 23rd, 191, so a little bit earlier. In this case, it would have taken you out right here, but it got you right back in again on November 9th. So you can kind of see how this works. So it's meant for long-term trading. It's meant to get you in at the beginning of an uptrend. We look at NVIDIA, the actual close-in view. And you can see right here, November 1st is the day you would have got in after this big downtrend. course, you would have been all the way back here on the weekly chart and never have sold, even through this whole period here, never have sold out. So you can see here, other thing to notice is NVIDIA is starting to pull back, just like the rest of the market. So NVIDIA is starting to pull back right there. Apple, turn this off. The momentum indicator is starting to roll over. Apple is starting to pull back. It might head back to its 21-day at 185. NVIDIA may head back to, it's almost at its 21, 475. It may go back down here to 460, 450 on the 50-day moving average. And what was the other one? Apple. Apple right here also rolling over, momentum indicators rolling over. This down here is rolling over. It may come back to 185. So with all of that in mind, let's take a look at one more, and then I'll look at Tesla, see what Tesla looks like. Let's look at Netflix on a weekly basis. You can see right here, Netflix did not give you as good of an entry because it's been in the red all the way through this period. Even though this is green, it's still in the red down here. So it broke out of the red briefly there, and it has just broken out right here at the beginning of November. So that's good news in general, because I think the market is going to continue higher into January, even though we might get a temporary pullback. So Netflix, some folks have asked me, why wouldn't you get in down here if it's green, and why not here if it's green? Well, you could, but you have to understand it's still under the red warning sign right here. It's under a red shading. So you certainly can do that, but you just have to be aware that you might be getting out very quickly as well. If we look at Netflix on a daily basis, again, right here, it would be a time to get in November of 22. That was right after the bottom. The bottom was in October. And Netflix has moved up since then with a couple of times where you might get out on a daily basis. And then looking at the closer in chart on Netflix, more recently, you can see right here where these lines crossed, you would probably get in right after earnings on this big gap up. October 19th at roughly 400 is where it closed, and it went up to 480. And still has not given a sell signal. It hasn't even crossed its 8-day moving average. So Netflix still looks like it's really strong, even though some of the momentum indicators, like all the rest, are starting to roll over a little bit. Now, I mentioned in the last video that I think the market may, in the next couple of weeks, might decline. But I think the end of the year and into January, it's going to have a nice run. So finally, let's look at Tesla and see what Tesla looks like. So first, let's look at the weekly chart. So you can see here right now, it's under a sell signal. So it gave this sell, remember this is a weekly, so it's a long term, gave this sell at about 211. That was the closing price on that day. On October 16th, it looks like it's the line down here is starting to come back above, but it looks like it's rolling over a little bit. The green line has not yet crossed. So this is a perfect time to do what I showed you before. So hasn't crossed yet, hasn't given a conservative buy signal. Interestingly, the 50-day went below the 200 and is just trying to get back above it. It's still below the 200 right now. Just trying to get back above it. But it has not yet given a buy signal. So Tesla is a good one to watch using this strategy. So let's look at Tesla on a daily basis. And now you can see, again, it has not yet given a buy signal, but it has started to move back up. And the black line right down here is just now crossing higher. So it is just about ready to give a buy signal, but it has not done it yet. So I wouldn't necessarily be buying Tesla yet, but you might want to get ready for it. If you've been following this before, you would have probably got in back around here, May 30th at 201. I mentioned that around that price on the weekly chart as well. 201, and then you could have got out, just moved to cash right here at 245. So roughly a $45 move. And that's what, 20%? A little more than 20% in from, what's this? From June until August. So 2 months, you make 20%. That's not bad. If we look at Tesla on a closer in view, just click on the name Tesla right here. Now, in this case, you can see you would have been out right here on October 18th because all these lines down here crossed, this background red crossed over. The actual bar turned to red right there on October 13th. That would have been at 251. You could have been out and then waited. So the line started to cross back over right about here, get back in at 237. All of the moving averages are now accumulating right here at the exact same place. It's above its 200-day, and it needs to get above these moving averages. So again, it's almost there, but it's not quite there yet. But it's almost there. So again, keep watching it, see what happens. If we go back here at the beginning of this run, you can see all the moving averages again, very similar. Turn this off. Actually, let me see what the price was. Price down here was about 185. Right down here, all the moving averages are getting ready to cross, very similar to what it looks like right now. So when they crossed right here at about 185, we could have ridden this up until they crossed again at about 260, 270. And even potentially got out right here on this one big red bar at about 260. That's also about 260, 265. So that would have been a nice run as well. 185 to 260, that's $75 in roughly 2 months. So that's a pretty nice run. By the way, hopefully after all of the training that I've talked about, you can go back and look at my other videos. You see where the price made a new high right here, but the momentum indicators made a new low. That is a negative divergence. So that's the big warning sign right there. When this new high happened and this continued, you can actually see it on this first new high. This one right here to this one, you can see this made a lower low. It went down and continued back up, but it made an even lower low. So the first red bar right here would have been the time to get out on this one. So that's where we are. I think Tesla right now is not quite there yet. If the market does have a pullback, Tesla might go down with it, temporarily at least. I would watch probably the 200-day, somewhere around 220 as an entry point potentially. Or if you want to be sure, wait till it gets back above about 240 or so, 245, when it gets above all of these moving averages and continues to move higher. So Tesla's not there yet, but it's looking like it wants to go. And if we get that rally at the end of the year, it very well might. So that's it. That's it for Magnificent Seven for Tesla. Hope that was useful and interesting for you. On my website, I put a top 10 list from all these different subscriptions that I have: VectorVest, Earnings Beats, and IBD. The yellow shows which ones are in the first column, and in one of the other two, the orange shows you the ones that are in the second column and also in one of the other two. If I ever get one that's green in all three of these groups, it will be green across the board. I have never had that happen. I have never yet seen the same stock in all three of these subscriptions at the top 10, which is really interesting. All right, so that's it. Hope you have a great weekend. Hope that was interesting for you. If you're interested in getting the newsletter for free, just go to breakpointtrading.net, click on this button here, and you can download the newsletter or register. If you would, which is down at the bottom of the homepage, there's a registration for $0. Over here, you can register your email, and then you'll get notified when the newsletter is ready. Or you can do a monthly subscription if you want to do a 7-day free trial and just try it out, see what everything else on the website looks like, And then for $99 a year, you get everything plus the risk management calculator to help you manage risk and size your trades. That's only with the annual subscription. Okay, so I hope that was useful. Have a nice weekend, and we will talk to you probably Wednesday. I'll do a midweek update, and then maybe next week Zuber might be back. So I've got a number of things I want to talk to him about when he gets back, so we'll see how that goes. All right, thanks for watching, and have a great week, everyone.